£28,000 tax-free sounds ridiculous, I know. You're probably thinking, I've never even had £28,000 sitting in my bank account. But this video isn't about cash you're missing today. It's about 7 UK tax-free allowances that exist on top of your £12,570 personal allowance, which you see on your P60. Allowances most PAYE workers never fully use. When you stack them properly, pensions, ISAs, property, savings, and a few less obvious ones, the total amount of income that can legally avoid income tax adds up to over £28,000 a year. This isn't tax evasion. It's how the UK PAYE system is actually written, but most people never claim these allowances because they're not automatic. I'm talking about 7 government-approved allowances that are sitting in plain sight, including a massive £7,500 property relief and a little-known savings allowance. And because the government has frozen these allowances again, they are losing value every single day. If you don't use many of them, you'll lose that year's benefit. In this video, I'm going to show you the 7 tax-free allowances sitting in front of you that can save you thousands this year. Let's build your tax shield. Allowance 1. The £7,500 ghost room. Let's start with the biggest cash protector. If you have a spare room, you are sitting on a gold mine. Even if you don't own property, stay with me. The next allowances apply to renters, employees, and side income earners. Under the renter room scheme, you can earn up to £7,500 per year tax-free by taking in a lodger. That is £625 a month straight into your pocket, zero tax. This creates a massive opportunity for the 2026 cost of living. And yes, this can apply to Airbnb when it's a room in your main home, not a separate property. Just a quick note, if you share the property income with a partner, you get £3,750 each. But for most people, this is the single biggest tax-free boost available. And if that doesn't apply to you, the next allowance applies to almost anyone with a side income. Allowance 2. The Vinted Shield. This is for the side hustlers. You've probably seen the headlines about HMRC cracking down on Vinted and eBay sellers. This allowance is your shield. If you sell things on eBay, do a bit of consulting, or bake cakes on weekends, you do not need to tell the HMRC about the first £1,000 of income. This is the trading allowance. It's a flat £1,000 tax-free wrapper for casual income. But here is the trick. You can't use this and claim expenses. It's one or the other. So, scenario A, you sell £800 of stuff. The result, it's tax-free. No tax return needed. Scenario B, you earn £1,500 but had £200 of expenses. You can just deduct the £1,000 allowance instead of the expenses, leaving only £500 taxable. It's the simplest way to start a side hustle without the paperwork headache. However, you still need to keep basic records, but you usually don't need to file a tax return. This allowance exists so small casual income doesn't trigger tax admin. The HMRC expects people to use it. Allowance 3. The marriage transfer. Now, a quick win for couples that millions still miss. The marriage allowance. If you are married or in a civil partnership, you don't just have your own tax-free allowance, you can steal a bit of your partner's. Here is the rule. If one of you earns under £12,570, maybe working part-time or studying, and the other is a basic rate taxpayer, the lower earner can transfer £1,260 of their unused allowance to the higher earner. This isn't a deduction. It is a direct tax reduction worth £252 in cash every single year. And the best part, you can backdate it 4 years. If you've missed this since 2022, the government could owe you a cheque for over £1,000 today. Go to gov.uk and search Marriage Allowance. It takes 5 minutes. And if that tip just put money back in your pocket, do me a favor and hit the like button. It helps the algorithm show this video to other people who are overpaying their tax. Now, quick reality check. You don't need to use all of these allowances. Most people will only qualify for 2 or 3. The mistake is using none. If you've already spotted what allowance you're missing, pause the video later and claim it. That single move could be worth more than the rest of this list combined. Allowance 4. The savings starting rate. This one won't apply every year, but when it does, it is one of the most powerful allowances in the system. This is the most understood rule in the UK tax book. Everyone knows about the personal savings allowance, but there is a secret starting rate for savings of £5,000. Here is the catch. You only get this if your income from work is less than £17,570. Some of you are going to say, but wait, I earn £30,000. This is useless. Not necessarily. If you retire early, or if you take a sabbatical year, or if you heavily salary sacrificed down to a minimum wage, your work income drops. Suddenly, you unlock this £5,000 allowance on top of your £12,570 personal allowance and your £1,000 savings allowance. That means you could earn £18,570 purely from cash interest and your work, without paying tax. It's a powerful tool for anyone planning a mini retirement. Here's an important detail. This £5,000 reduces as your earned income increases, so it's mainly useful in low income or transition years, not alongside a full-time salary. Allowance 5. The dividend allowance. Here's the bad news first. This allowance used to be £2,000 and then £1,000. Now for 2026, it is just £500. But don't ignore it. If you hold shares in a general investment account, the first £500 of dividends are tax-free, with dividend tax rates potentially rising to 10.75% and 35.75% in April 2026. You need to be careful. The strategy is simple. Use this £500 to hold your high-yield income stocks, but the moment you cross £500, move the rest into an ISA. Do not leave dividend drag in your general account. Allowance 6. Capital Gains Allowance. Another frozen allowance. You can make £3,000 profit on selling assets like stocks, crypto, or second homes tax-free. If you are married, you each have £3,000. That is £6,000 per household. The trap is that if you don't use it, you lose it. You can't carry it forward. The hack here is the bed and ISA. If you have shares in a normal account with a £2,500 profit, sell them before April the 5th to use your allowance. Then move the cash into your ISA and buy them back immediately using the ISA. This avoids the 30-day rule because the repurchase happens inside an ISA. Allowance 7. The pension time machine. Okay, this isn't strictly a tax-free allowance, but it is the ultimate tax shield. It's for high-earning individuals, but even if you're not a high earner, knowing this early prevents costly mistakes later. You have a £60,000 annual allowance for pension contributions. But did you know you can use unused allowances from the last 3 years? If you have a massive bonus in 2026, you can use carry forward to wipe out the tax completely. Or if you sell a property, a big pension contribution can lower your income significantly, pushing your capital gains tax rate down from 24% to 18%. You can reach back into 2023, 24, and 2025 and use those unused limits to dump huge sums into your pension with tax relief upfront. This is how high earners erase their tax bills legally. So, let's do the math. In 2026, you could theoretically have £12,570 in personal allowance, £7,500 in rent and room relief, £1,000 from trading allowance, £5,000 savings starting rate, £1,000 from personal savings allowance, £500 dividend allowance, and £3,000 from capital gains. That is over £28,000 of tax-free income. And that's before we even touch ISAs. You probably can't use all of them, but are you using any of them? Here are your next steps. Pick one allowance from this video that you aren't using, whether it's the marriage allowance backdate or the trading allowance for your eBay sales. Go claim it this week. Don't let the Treasury keep the change. If this saved you money, subscribe. And check out this video here where I break down the tax traps that will hit you in 2026, where pay rises start working against you. It's another video that will help you keep more of your salary and build the fortune that you deserve for retirement. I'll see you in that video.